Happy Wednesday, ladies and gents. Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. And we've got quite a lot to get through. It has been a rather interesting week thus far, and we have seen what I believe is a continuation on that journey to the upside, not just for Bitcoin, but for the cryptocurrency markets actually get initiated, with Bitcoin breaking out of that holding pattern, that descending, broadening channel that it's been in since March this year. We are now on the cusp of witnessing the next leg higher for the cryptocurrency space generally, but of course Bitcoin. And there's a number of confluencing patterns that obviously have led us to believe that upside was very likely, and we're going to look at that and the continuation of that. Really, to kick the video off, this week was always going to be an interesting one, and we did speculate that it was going to be volatile, but likely to the upside based on how most major markets are positioning. Tomorrow, and I would like everybody to actually watch this video, I'm going to be releasing a video with the Market Sniper where we really talk about this next leg for Bitcoin specifically, and we don't really go into the ramifications of it for the crypto market more broadly, but we relate that to the global reset, the global monetary reset that we are on the door of, ladies and gentlemen, and the continued proliferation of debt is absolutely deliberate. And you've kind of got kamikaze-style governments in the West essentially enabling some sort of a regime change on more of a sort of global scale. But we'll cover that in tomorrow's video. Today, we really just want to sort of give you an overview on the latest and greatest things that have happened over the past 24 hours. We're going to be starting things off by looking at some ETF inflows. We saw the most or the largest numbers in 6 months yesterday, all coinciding with Bitcoin now breaking out and continuing and affirming that breakout that it's looking for to the upside. And then we're going to be talking about, we've got the UK Labour budget. I'll be doing a video, just me talking about some of my thoughts on it towards this evening. And then we're going to be looking at the S&P. Obviously, it's a big earnings week. We looked at that. And of course, you've got lots of economic data. And we've got news from Germany, which narrowly avoided recession this morning. And of course, we've got ADP numbers, which came out hotter than expected, just like the prime non-farm payroll, which is really where you saw the initiation of this dollar strength. There's a hell of a lot going on in terms of how economics has previously worked, potentially becoming undone due to the nonsensical nature of the monetary systems, which was the entire reason why Bitcoin was created in 2008. Now is the time to start building and changing your status financially. Otherwise, I fear truly the consequences perhaps of not doing so. We might not be the right guy to help you do that. We might be. But I'm genuinely saying, guys, ladies and gents, something serious is coming in regards to a monetary shift, and it's time to start paying attention. We'll explore that later on this week. Let's just kick things off, as always, with the latest and greatest news over the past 24 hours. This is from Eric Balanchunas, the man, the myth, and the legend himself, the guy to follow when it comes to ETFs. Obviously, he's the senior analyst over at Bloomberg. IBIT, so BlackRock's Bitcoin, traded in one day $3.3 billion. Biggest number in 6 months, which is a bit odd because Bitcoin was up 4%. Typically, ETF volume spikes in a downturn or crisis. You can see the prior big, large spike here was on the back end of the Japanese yen carry trade. Occasionally, the volume can spike if there's a FOMOing frenzy, a la ARK in 2022. If you look at what ARK did in 2022, it did very, very well. I think that's their innovation ETF. Given the surge in price past few days, my guess is this is the latter, which means look for the more big inflows this week. We'll see, though. And the FOMOing event, which we've spoken about, is the breaking out and now the continuation of this pattern here, ladies and gentlemen. So this was and is just a pullback in what is a broader uptrend. There's a number of, we didn't mean to go to the 2 weekly there, guys, I do apologize. There's a number of confluencing patterns, whether it be the fact that you are just in an uptrend, which is very typical, whether it be This inverse head and shoulders, very textbook that you come back for a retest once you break a key level of significance, whether it's the cup and handle or whether it's the bull flag or whether it's the smaller pattern that we looked at within this sort of descending wedge that essentially is likely going to bring you to 84k. Bitcoin is going higher in our opinion. Ultimately, you've just embarked on that next leg, and we're seeing that reaction from or confirmation from the likes of IBIT. Remember, throughout this entire pullback, we've seen accumulation from institutions. We've seen Bitcoin whales accumulating, and we've seen Bitcoin on exchanges get essentially just gobbled, just you vanish essentially. Eric Balanchunas also highlights, okay, we need to move up our prediction, as yesterday alone, the Bitcoin ETFs gobbled up over 12,000 coins like Pac-Man on a bender. Now at a staggering 996,000 Bitcoin, good chance to surpass 1 million today, as the radical move volume yesterday likely to translate to big inflows tonight. Legit shot at to get to Satoshis by the end of November. There's a central banks, not central banks, sorry. There are central banks. I was about to say central banks are gobbling up gold, but the largest institutions in the world are all gobbling up Bitcoin. Why is all of this happening right now? And, you know, there's some real questions that need to be asked and answered. So we're likely going to see, which is very common, because guess what, guys? Institutions use technical analysis. That's a large part of why it works. And when you get a breakout, people will buy that breakout. And they'll often buy the retest, like what we saw down here on the back of the yen carry trade. This is destined for continuation. Bitcoin is the tide that rises and sinks all ships. Bitcoin very much the star of the show. You can see Benjamin Cohen going around and trolling everyone on Twitter right now. Credit to him. He's been very steadfast. And I know what it's like personally being somebody that is public. You know, you can get times where you get a lot of heat thrown your way. Certainly when he initially made those calls, that was the case. He's persevered, and he deserves all the credit that he's getting right now for that. But Bitcoin is very much the star of the show. However, it's not just Bitcoin that is about to embark. If we take Bitcoin out of the equation, look at Total 2, this has got that continuation to come along with Total 3, which is now broken out and embarking on that next leg. And let's go on my meeting. Also others. And you can see all the bids coming in here. So Bitcoin is going to rise the entire market, and this is the initial sort of kicking off of it. Yesterday, like I say, I did a meeting with Francis Hunt, the market and the crypto sniper, and he was looking at this as a bull flag, or a megaphone as he'd call it. You can watch that tomorrow. And the target this projects also coupled in with the inverse head and shoulders that we also have. When there's confluence, and there's confluence for multiple reasons, technically, but actually more broadly in regards to gold, silver, and Bitcoin all doing well as an anti-fiat category, when it walketh, talketh, and quacketh like a duck, it's a duck, ladies and gentlemen. And this volume that we're seeing from institutions is largely going to be, I believe, symptomatic of the breakout and the institutional bid that will inspire, and the continuation in terms of the positioning in regards to the expected continuation of Bitcoin's price. Get ready, guys. It's here. Also on the altcoins, a quick topic. Let's throw back. We don't want to go portfolio. If you want to unlock my portfolio, do become a Patreon. Also, there's that. I think it could get near a 100x stock that we have. You know, we think Bitcoin mining is going to be a matter of national security. We did look at, on the topic of altcoins, Grayscale Digital Large Cap. Look at this go now. This is a triggering event, and this tracks a basket of altcoins. Anyway, I digress. Bitcoin also likely going to make headway against gold. So just to sort of capstone that, yesterday Bitcoin has now triggered and is now on that journey to the next leg higher. And the altcoin market will follow. And we're about to see some spectacular things, but the star of the show right now really is Bitcoin. Some pressing matters. So today we have the bill, the UK Labour bill. We're likely going to see increases to taxes. I will do a full video on this later on, probably just a video with me in the camera. We've obviously got a lot of stock market earnings, some of the largest companies within the S&P, but the S&P futures rise after Alphabet posts an earnings beat. Remember, we were expecting that. Let's go over to the S&P because we ultimately have higher targets for the S&P. So the futures, I don't actually have, I have futures on here, the ES Mini. Not doing a great deal. But we've got continuation for the S&P. We got that's likely going to be going higher. And that's obviously happening right now. There have been some not so great companies. Caterpillar, I think, was one. We have breaking news that the US economy grew at a 2.8 pace in the third quarter, which is less than expected, but it's still growth. We also had news out of Germany. They've just narrowly missed a recession with a slightly positive quarter. And in regards to US data, we had not non-farm payroll. We got non-farm payroll on Friday. We had ADPs, which showed more job creation than expected. And the expectations were 149,000, and the job numbers, which are likely tinkered with and are largely government fed, came out at 233. So there's a lot to sort of tie in here. From an economic point, we've said, largely based to government intervention and stimulus and shenanigans, that the economy is in good stead, in our opinion, and that you're going to see a supportive environment for assets generally when the Fed is looking to continue the mass proliferation of money. You're seeing this signaled in Bitcoin and where it's going, gold and where it's going, the likes of silver, potential 10x coming for silver. Silver miners also confirm that, in my opinion. Bitcoin miners confirm there's something magnificent going on right now, and ultimately the result in that is an increase in assets broadly. And we've now embarked on that next leg as it relates to crypto, specifically based on Bitcoin. But economic data continues to be quite supportive of our theory that a crash isn't here, a demand destructive event is a while off. And we've maintained that theory since the start of 2023, despite all the sort of reasons why people have been putting forward that there might be one. Yesterday, we saw a real institutional appetite to Bitcoin, likely on the continuation of that breakout that ultimately signals higher prices are ahead of us. That's it from me, ladies and gentlemen. I hope you enjoyed this update as much as I enjoyed presenting it. On that note, I'm going to love and leave you. Thanks for watching, guys. See you all in the next one.